So, Barry, if I heard you correctly, you mentioned that you don't see inflation hitting that, getting down to that 2% target, but you also don't see it moving much higher. So, my question then is, why do you really think Fed Chair Powell, is going to actually lower rates and therefore you're going to see a 20% return in the bond market? Is that going to just be the back half of 2025, or what has to happen for that to take place?
Yeah, I think you're going to see deterioration in the labor market, which is the other part of the Fed's mandate. Even today, the jobless claims numbers are showing a little bit signs of weakness. They're still very good, um, but I think of the two mandates, politically, unemployment is more sensitive than inflation because inflation affects people differently. And as long as food and gas are not going up too much, and they have come down from pre-pandemic levels, they're at levels that are too high but not problematic. And if they're not rising, then the Fed is going to focus on unemployment. And I think the impact of the US dollar being so super strong starts to impact economies around the world and the US economy. And I think you're going to see the employment numbers very gradually deteriorate.
Mm-hmm.
And the Fed is definitely paying attention to that.
So, just to connect the dots for everybody, including myself, you think that the stronger dollar is going to affect companies, corporations, because other countries can't import those US goods, then maybe they lay off people. Is that the connection here?
It hurts margins, right? So uh, most of the big US companies are very multinational, which means that a strong US dollar converts all the foreign earnings into US dollars at lower levels
Mm-hmm.
than when the dollar. So, and you see, around the edges, Amazon is closing things in Canada and Quebec, and
Yeah, why is that?
all of
Why,
those.
why, why did, why do you think that's happening?
Well, in Amazon's case, I think they closed them in Quebec because they formed a union, and Amazon doesn't want to have unionized employees because unionized employees cost more than non-unionized employees. And so,
Mm-hmm.
they just, okay,
Shut
we're
it
going
down.
to close our operations and we're going to use third-party delivery systems. And, it's cheaper and less headaches.
Mm-hmm. Hmm. So, do you also, though, Barry, really believe, like, do you think there will be some action taken by the Trump administration to lower the US dollar?
Uh, Not outwardly, um, but I think it naturally happens if the US economy weakens and the Fed lowers rates more than the market is discounting currently, which I expect to
Mm-hmm.
happen, then the US dollar will weaken along with it. So,
Mm-hmm.
you know, there's really nothing a president can do to lower interest rates. That's the Fed's area.
Mm-hmm.
But it will follow the and tariffs might be good for the
Mm-hmm.
deficit. It might not be. I'm sure what he's going to do. Um,
Why would it be good for the
but you
deficit?
don't,
Because they're going to collect more money?
as they collect more money. But the other thing it does is it it increases inflation because it does one of two things. If you have a tariff, you either have to raise the price of your goods or you have to eat it and lower your margins and become less profitable. And that, mean then you have to lay off people and it weakens the economy one way or the other.
Mm-hmm. Hmm. I also want to get your take as well on the impact that tariffs are going to have on the Canadian economy. What's your
Right.
quick view? And we'll pick it up on the other side of the break.
Sure. I think you're already seeing that in Canada for sure.
Okay. We'll take a quick break. I'll get more on the other side.